Hey everybody, it's Todd at 51% Crew again. Now that I got you to click the link with the very misleading title, like every other clown on YouTube, I got you here, so, well, you might as well stick around and learn something, because in this video, I'm going to go ahead and show you how to use a Fibonacci tool. I'm not going to go over the principles of how to trade a Fibonacci or the rules behind it or anything like that in this video, because that is going pretty in depth. So what I wanted to cover in this video was how to actually use the tool, because this way, if you learn how to use the tool, I can go back at a later date and go ahead and make another video on how to apply Fibonacci to your trading. So this will give you the basis to get started and learn how to use the tool. So what we're going to do is, Fibonacci is found over here in your toolbar section. You can go ahead and click this and it'll say Fibonacci Retracement. That is the most common one that everybody uses. And this is what you see everybody getting your levels from. You also have a trend-based fib extension, a Fibonacci speed fan, time zone fan. There's multiple different calculated fibs to lay on a chart. Today we're going to go over the Fibonacci Retracement tool and how to properly use this on a chart. Like I said, I'm not going to teach you how to apply this to your trading. We'll save that for a later dated video once you feel comfortable laying these on the chart, because I'm noticing a lot of people are still in question on how to lay these on a chart properly, and it's actually really simple. So let's jump in and get this started, and I'll show you. It's real simple. So we're going to click our fib tool, and you can do this two ways. You can do it the way I showed people how to lay a trend line and adjust it accordingly, or you can use your magnet tool like I also showed in the other video. So if I'm going to keep my magnet tool on. I'm going to show you how to do it both ways and the reasons why you might want to do it two different ways. So right here is your magnet tools on, and what you do is you drag with the trend wick to wick. So we're going to go from this wick up to this wick. So we just drug with the trend wick to wick. So I always do wick to wick because that's going to give you a true and accurate measurement of the market. There is one exception to this. I don't use the wick on an abnormal movement to a specific exchange. For example, say the price skyrockets for Bitcoin on BTCE or one of the other exchanges like Kraken or something, because they don't have as much liquidity on the books, and you see this long, really long wick. But if you look at every other exchange, you don't see that wick. That is when I don't use the wick. I use the body of the candle. But under normal conditions, it's always the wick. Wick to wick with the trend. Remember that. Wick to wick with the trend. You can go a Fibonacci up, you can go a Fibonacci down, you can fib inside of a fib inside of a fib. You can have several of these things on your chart. So we just went with the trend up. So I'll lay another one for you. This fib will run from this to this. So we went down with the trend now. And the smaller the time frame, the more of the accuracy you're going to get on the move. So this is going to give us our structure of the overall market condition and where we're at. And I'll show you another little trick. Sometimes I do it, sometimes I don't, depending on market conditions. For example, if you see this 618 retracement here on the downtrend for this, where we bounced at, you see it kind of punched through it. Sometimes I will take my magnet tool off and I will move this up slightly to line it up with the other 618. Even though the price dipped through that a little bit, because a lot of traders will do that to keep the levels even. So I basically drop my trend tool down with the trend and use the magnet. Now you can also go in here and do it the same way I showed you with the coordinates for the trend line. So this candle here, low was 92.31.1. So we'll go 92.31.1. It adjusted just like the same as the trend line tool. So either way is acceptable, and it's whatever's easier on you. So let's go in and show you another little trick. Now that I have two fibs on this chart showing my levels, see how this is kind of cluttered up here? I want to clean up my chart because this isn't very easily read. So what I'll do is I'll go into my settings here, I'll go into style, and I'll extend my lines over now. So now I can catch these lines and I can see my levels in here. So what we do is I extend the lines over. Let me move this up so we can see it. And my labels, I will move them to the right now. So now look what we have on our chart. Very nice and clean. You can see the levels for this Fibonacci, the levels on this Fibonacci. Another example of when I don't use the magnet tool would be, because when I want to zoom in here, I lose my fib levels. So if I'm using a larger time frame, I will take this and move this over to here, because I don't need to see this relative data on the chart when I'm trying to trade over here. So this is when I will use my low on my candle and not the magnet tool. That is 2980.4. So go into here, price 2980.4. So now I have it accurate even though it's not drug over from this wick. So this will give me a more zoomed in approach to this market here. So any of this is acceptable. We'll go ahead and let's clear these off our chart. We'll do some more. Let's go into the 1 hour. And we want to measure this move here that went up, and we're trying to get into our position on the entry. So we want to get in probably at the 50 or the 618, for example. So what I'll do is I'll come here. Let me click my magnet tool on. I'll go from here, this move to this move. Let's go into my settings, style, extend lines out, and here we go. Now I just fibbed this move. So I'm looking for a retracement to come down into this 50, 618 zone generally. So this will give me an idea where price action is. So if I wanted to start buying this market, I would buy in this zone. I would wait down until it comes down, touches the bottom of my zone, and buy it all the way up. Generally, good traders don't buy at prices, they buy in zones. So this is an example how Fibonacci will work for you. It's all about measuring the market. You say, Todd, what is Fibonacci? What's it do? It's a mathematical sequence of adding numbers. And the reason it works so well in the market trading is everybody has this tool. It's not even really relevant to the actual market. It's everybody's using this tool, so therefore you can expect, or hope to expect, when support is going to jump in and start buying in the 50 to 618 zone, because this is when the professional traders are going to start looking to buy. So it'll give you an idea of the price. So you can fib all these moves, like Fibonacci retracement. We'll see. It can also give you an indicator where to sell. Look how this bounced to the 50. They sold the market. It's either going to bounce to the 50 or the 618 generally. And you can go through here and find examples of examples after examples of this. And you can basically fib a candle if you want. And you can fib one candle on a breakout. This right here, you're looking at 100% retracement on this candle. So wherever you wanted to figure, then there you go. So I wanted to cover basically just showing you how to lay this tool. So let's go back in here and we'll go back to our 1-day chart. And let's get rid of this. There's another one called a Fibonacci extension tool. I'll go over that one real quick with you too. It's a trend-based fib extension. This gives you an idea of where's the market going. So let's fib this recent long move from here to here to here. Extend our lines over and look. Now we can zoom down and measure, take a measurement of an entire move. So this move from here to here minus the retracement goes to here. So let me take a trend line and show you. I'll try to get this close. So this trend here will basically, if you pick this up and measure it, look where it goes. Exactly to the 1. That's taking a measurement of this market. So that's how these can be applied in trading unforeseen markets and all-time highs. So this is a good tool to learn to use. You drag with the trend, with the trend. So it's really that simple, and I just wanted to give an explanation of it so you guys can start laying these on charts, seeing what you're doing right, seeing what you're doing wrong, get an idea on the feel of things, and later on we can go back and do a follow-up video on how to apply this to your trading, the general rules of the 618 retracement, the 38.2 retracement, you know, what the 50% retracement means, and there's a lot of rules that apply to this. I could probably go on for hours on this topic, but we need to get you learning how to properly lay a fib before we do anything. So once again, before we go, I'm going to show you and make it real simple. You go wick to wick with the trend. Wick to wick with the trend. Down. Wick to wick with the trend. Remember I said that. So I'm going to conclude this video at this point. Basically, if you found this helpful, like I always say, go ahead and throw me a like, I guess. I mean, not like I do it for likes or anything, but I guess it's kind of cool to bump the YouTube video up so other people can learn. So that'll be a little bit helpful, and subscribe for future videos. And I'm gonna keep doing them, and I'll just do them step by step and keep adding pieces so you can add a little bit more to your arsenal for trading and hopefully learn something. So hope everyone enjoyed this, and have a good day.